All right, folks, welcome back. Not directly a price concept, but kind of like a back end, not necessarily mindset concept, but basically giving you an understanding of what you're actually trading and what your role is in the markets and how you actually function as a ICT concept trader. There's about four levels to this market. You have the dumb money, which is, uninformed traders or retail traders. And then you have smart money, which contains two levels. Okay. Smart money is us, like me and you, the 150K funded accounts and maybe close to like $1 million, stuff like that, like the small money. We're the small part of smart money, but we're still smart. You get it? But then you have the interbank, which is institutions, not interbank, but private equity, hedge funds, private banks, a lot of everything that's like basically private, but billions, millions, hundreds of millions up there. It's basically just a bigger portion of what's the word of smart money. So me and you, we are the lower version of smart money, unless you're a hedge fund trader managing $100 million account, in which I probably don't know that. But if you are, then you're part of Interbank. But if not, and you're buying funded accounts and trading on $20,000 live accounts, then we're the same. We are in the smaller part of smart money. But the level above smart money is the algorithm. Okay, the algorithm is the one thing that controls 80% of this market, in which there's a level above that, which is central bank. So there's basically kind of sort of like five levels, but smart money contains two levels in one, which is the interbank, which is the bigger portion of smart money, and then I guess you can say the kind of sort of the retail smart money, but retail is mostly associated with like the dumb money. But I guess you can just call this a smaller portion or the broker version of smart money, if you want to call us that. So we're the broke version of smart money, me and you. But the interbank, they have the hundreds, the billions, the millions, they're trading on the daily, the weekly, stuff like that. That's them. Okay. So the four levels, starting from the most significant or most controlling to the least controlling or the most uninformed. Number one, central bank. Number two, the algorithm itself or the enigma. Number three, smart money, which contains me, you, and then the bigger portion of smart money, which is interbank. And then the final level is retail or the uninformed money. Now, how does this pyramid or this pyramid scheme actually work? Central bank is not directly into the market always. And when I say always, I mean like it it's only influencing the market at certain times. And when I say certain times, I mean like Powell speeches, FOMC decisions, a couple other things too. This it's like very I can't really explain it, but it's like certain justifiable events in which smart money will be like, I mean not smart money, but central bank will be like, okay, let's just tweak this, have the market drop down. They can literally do that. Like they can click a button that'll cut off all markets and cause everything to go to zero. That's how powerful the central bank is. Central bank controls certain sectors, meaning, for example, the Central Bank of America is the Federal Reserve, which controls majority, well, no, not majority, but all US dollar based um, currency pairs and indexes, and basically anything that has anything to do with the US dollar itself. So the Federal Reserve deals with the NASDAQ, the SP 500, the Russell 2000, the US 30, the Euro dollar, the USD JPY, stuff like that. Anything that's dealing with the dollar or I can't really explain it, but since the Federal Reserve basically controls or is managing the dollar, anything dealing with the dollar can be manipulated by the Federal Reserve of America. Real simple, right? And basically, that goes for any other central bank in the world out of all the, I don't know how many countries are in the world. I'm not that stupid. I'm not stupid, I swear. But I just don't remember the exact number of the amount of countries that are in the world. But every country has a central bank, and that central bank controls whatever whatever markets are dealing with that central bank's currency. Simple, right? That's the highest level. It is basically the puppet master. It's not always here, but it's definitely always present. And you're probably like, what does that even mean? Like, what does that mean? Basically, they're always watching the market, like they're always here present watching the market, but they're just waiting. They're waiting, watching, and waiting for the not necessarily the perfect opportunity because they don't need an opportunity. They can just, like I said, click a button and this market goes to zero. But they're trying to find points in price to where it's not obvious that they're manipulating the market. Because this market is rigged. No one can say that it isn't. It is. But what they're doing is they're trying to find justifiable moments during Trump speeches, Powell speeches, FOMC decisions. I wouldn't say during economic events like non-farm payrolls and what's the word? CPI, because that's like kind of like economic data, not really like on a central bank level. So that's mainly like the algorithms work. But central bank, it's mainly like announcements, speeches, decisions, meetings, cabinets, stuff like that. That's like on the central bank level. Basically, using very, very, very critical events to justify price into dropping 2,000 points. That's basically what central bank is. It's very manipulative, and it'll basically say, "Oh, that wasn't me. That was just the meeting. The meeting caused price to drop 2,000 points. We didn't click a sell order for 20 billion contracts and cause market to drop 2,000 points. That wasn't us. What are you talking about?" It basically trying to make you look crazy in a sense, but you get the point. The algorithm is the second level of control, or in what's the word? Or second level of most informative. That's basically how I can classify it. The algorithm controls what is it, 70 to 80% of all markets in the world. It's a very, very widespread algorithm. I think it's called the Enigma, in which it does have another name, in which I might tell you what it is. I forgot what it's called. It starts with an I, so it then has like three numbers after it. But it's basically a large computer that controls 70 to 80% of this market, like I said. Now, the one thing that reigns over the algorithm is obviously central bank. I think I just explained that because according to the pyramid scheme, you got central bank, then the algorithm. When once that central bank intervention is there, once that puppet master is truly in the markets, that algorithm is like, oh no, that's my boss right there. I can't mess with that. Now the algorithm is what kind of think of it as like the central bank's employee. The algorithm is going to manipulate the market, yeah, but whenever central bank is in the market, algorithm is like, okay, let me just move out the way and let them do what they got to do. In which right after the central bank intervention is done, the algorithm will get back to its work. But what the algorithm does is it moves through this market by two things with two rules: seeking liquidity and rebalancing imbalances. That is all it does. That's the main two. The secondary, or what would you call that? Thirdendary? I don't know, but the thirdendary rule, I guess you can say, would be rebalancing to equilibrium. But that's kind of sort of optional. But the main two that causes this market to move like this, these candlesticks that you've seen move up and down, mainly imbalances, which is fair value gaps, volume imbalance, and stuff like that, and then liquidity. Liquidity is the main one. Okay. Now let me explain the smart money part because that's where we're still explaining the algorithm, but I have to explain part of smart money so we can actually, get and finish the algorithm definition. So what the algorithm will do is it'll offer smart money. Smart money is in me, you, and interbank, hundreds, millions, billions, those people, right? It'll offer those people, which is us, opportunities to take longs, shorts, exit positions, accumulate more positions, or basically anything that's dealing with adjusting or adding on more positions. Now, we're probably like, where does it do that at? At PD arrays. That's called order block theory. Okay. Order block theory is like literally price, not necessarily price, but the algorithm referring to order blocks. What are order blocks? Order blocks are order blocks, propulsion blocks, rejection blocks, mitigation blocks. I wouldn't say liquidity void because that's still like an imbalance, but what's the word? Michael calls it a PD rate because price can like respect it on like a kind of sort of like a swing trade basis, like over the course of like a week or two, it can respect it, stuff like that. If it's like decently large, of course. But the algorithm will purposely refer to PD arrays other than the fair value gap and liquidity void, because those are imbalances. It'll refer to um imbalances. I mean, not I keep saying that. It will refer to PD arrays in order to kind of sort of borrow liquidity so it can drive the market. Okay. The algorithm is the one that creates the facades and the fake outs and the actual manipulation and the rigging of the markets. The algorithm does the rigging, and we're just like the liquidity provider so the algorithm can actually move and seek other liquidity. Real simple, right? So the algorithm, like I said, is the actual manipulator itself. It rigs the market. It does everything it needs to do. With our liquidity, of course, it's still manipulating retail, the dumb money, them down there. But it's just using our liquidity to drive the markets. And so we can actually buy into the move and make money based off of its manipulation. So I think I just explained every level. Retail and dumb money is just dumb money. It's just retarded. They don't know what they're doing. So the algorithm is going to be constantly trying to manipulate them. Okay. Now, I think, yeah, was that everything? I think so. Hold on. Central bank, the algorithm, smart money, and yeah, that was literally it. Yeah, that was it. In which one more thing, the algorithm will also tend to, like I said, refer to these PD arrays. So certain parts of smart money that are in the red, because sometimes smart money might not know what the algorithm is doing. The algorithm knows where it wants to go and knows what it's doing, but sometimes smart money might not know that. So what the algorithm will do is it'll purposely refer to PD arrays, which is still order block theory, and give smart money the chance, which is me, you, billions of dollars, interbank, institutions, private equity, all those people, right? All of us, we're smart money. Except for the ones that don't know ICT concepts. That's basically what I'm trying to say here. If you know ICT concepts, you're a part of smart money. But if you're not, you're not. Um, what was I saying? The algorithm will refer to those PD rates to give the smart money that are in the red or that are in not necessarily deep loss, but are basically in drawdown and want to exit their trade after realizing what the algorithm really wants to do. They will refer to the PD rates and offer the smart money a chance to exit their trade or to even reverse their trade. Because you can exit your trade or even just there's certain platforms that let you reverse your trade. Like if you're deep in the red, it'll take the loss for you and completely reverse your order into a buy order. You get what I'm saying? It's basically a reversal. Did I just change charts by clicking the space bar by accident? Yeah. Oh wow. Oh, I did. Well, that's an SMT. I did not even peep that. Wow. I literally did not see that up there. That's crazy. I just noticed that. Anyway, this is the end of levels of the market. I hope I taught you this pretty well. This should give you some pretty good insight of where you stand in the market and how you interact with it, and what's your ally, what's your enemy, stuff like that, and how this market really functions. All right, and the hierarchy this market is actively working in. All right. Like I said, this is the end of levels of the market. Hope I taught you this well. This should be really insightful to your trading, and I'll see you in the next one. Good luck and good trading.